So now we're going to look at the steps in the in the closing process. But first I want to make sure you understand what the income summary account is. It's a temporary account. It's opened and closed during the closing process. And you should never have a balance in there except at the end of your period. If there's a balance any other time, then an error has been made. So now we're going to look at the steps in the closing process. First, we close the balance of our revenue account to the income summary account. Now, we do that first so that the initial balance in the income summary account will be revenue, and we can use that to offset our expense account balances. So think of it the same way you do your checkbook. You got to have money in it before you can pay bills. Same thing here. You got to have money in the account before you can start taking expenses away from it. The next step is we're going to close the expense accounts to the income summary account. Each expense account is credited for its balance, and then a compound debit is made to the income summary account. And that will be so that it now shows total revenue on its credit side and total expenses on its debit side. If the balance of the income summary is credit, then we got a net income for that period because the credit side exceeds the debit side. The credit side being the revenue side and the debit side being the expense side. Now, if we have the reverse, then we're going to have a net loss, right? So if the debit side were bigger, then we'd have a net loss. Step 3, we then close the balance of the income summary account to the owner's capital account. Now this is kind of like a midway step. The step where our net income or net loss is summarized in the account summary account, and then the amount is transferred, just one amount, or closed, to the owner's capital account. The last step is to close the balance of the owner's drawing account into the owner's capital account. So the balance of the owner's drawing account does not enter into the calculation of net income or net loss. Keep that in mind. So the balance is not closed to the income summary, and it's closed instead directly into owner's capital. So keep that in mind. And the way to keep thinking about that is revenue expenses are closed to the income summary, just like revenue and expenses are listed on the income statement. So keep in mind, the income summary account is a clearing account used to summarize the balances of our revenue and expense accounts. It's used only at the end of the accounting period. It's opened and closed during the closing process. It does not have a normal debit or credit balance like other accounts do, and it will never appear on financial statements.